We run Blockchain Founders Fund based out of Singapore. I have my lovely colleague here in the audience as well, Ahan. He came all the way from India. We invest in early stage companies in the blockchain space. We've done over 120 investments over the last 3.5 years, and fortunate to have a bunch of awesome founders in the portfolio. We just closed a new fund, $75 million. So you're probably one of them only, or the very few active investors in the space. And pre-seed, seed, all sorts of different verticals. We're very open and excited to just learn more about the space with the founders, learn about the innovation piece, and happy to be here and talk about our amazing topic today.
Thank you. Max?
Thank you, Tobias. Thank you so much. My name is MAXIMILIan MARENBACH. I'm the VP of Markets and Enterprises for Fasset. Fasset is a 100% Sharia compliant crypto brokerage and blockchain infrastructure platform focusing on the MENA region and emerging markets across Asia and Africa. And my team and I, we work basically on our global compliance, legal and licensing projects, as well as our business development and enterprise solutions. And like Tobias, I'm very excited to be here because I always feel like I learn a lot from these panels and discussions. So thank you very much.
Thank you. Thank you. Darius?
Hello. Thank you for joining us. My name is Darius ASKARIPOUR, originally from New York. Live in Thailand now, Bangkok, Thailand. We are a crypto hedge fund. We have a venture division. We also have a quant division. We do high frequency trading. We trade faster than anyone can in Thailand within the space that we're in. Have some prominent figures on our cap table as well. We're now in a process of expanding. This is a market we're considering moving into. In the process of being registered as well in Hong Kong. Cayman domicile, BVI management. Thank you for having us.
Thank you. Brenton?
Brilliant. So I'm BRENTON from CVVC. So we basically run an early stage Web3 fund for African companies that are using the tech to solve emerging market problems. We also run an ecosystem business where we have co-working, we do industry reports. So really trying to develop the African region in terms of blockchain tech. And yeah, I mean, that's us. Let's move on to the interesting content.
Fantastic. Thank you. Now, you said the interesting content. Is that my introduction?
That is yours.
Thank you. Thank you. So my name's Tobias Young, also go by the name of Toby. I'm the CEO of CST Dubai. We are a firm of traditional accountants that have been operating for 30 years, now specializing in crypto and digital assets. We have offices in Australia, Singapore, obviously the UAE, UK, and the USA. Very much my background is around infrastructure and regulation. And this is something that I think is very important. But that's enough about me. Let me go on to the questions. And just so people are aware, I'm not checking my messages, but I'm just reading the questions from my phone. Seems a lot better than using paper, obviously environmentally friendly. So we'll start with the first one. If we look at Bitcoin as the bellwether and an indicator for the digital asset markets, having dipped just below 17,000 at the start of the year, what has driven us in the run-up to 27,000 today? And this time, I'll start at this end with Brenton, please.
Brilliant. So, look, I think everyone's seen the chaos, let's call it, of the last 2 weeks. But as much as we like to think as crypto that we operate in this sort of bubble, I think by and large, if you just look at the data, crypto has traditionally just traded pretty much like a risk-on asset. Very, very close correlations with your US equity indices. And I think that's caused this ebb and flow that we've seen. So the dip to 17 was largely driven by these macro factors, the hiking of interest rates. And we've seen that affect markets across the board, not just crypto. And I think the same is true for the run-up from that bottom, right? We've seen this easing of sort of liquidity conditions. The market over the last few weeks is pricing in very different interest rate expectations than they were before, which essentially is indicating to the market that we're in a little bit more of a looser sort of liquidity environment. And those are the environments that Bitcoin and not just Bitcoin risk assets thrive in. And I think that's been the main contributing factor to the bounce off the bottom. And potentially over the last week, some would say a flight to safety from the banking system, but I think, in my opinion, by and large, it's just a very tight correlation to risk assets.
Fantastic. Thank you. Darius.
Yeah, I would have to agree with everything that you mentioned, but in reality, I think the market is actually extremely resilient, right? I mean, if we look at what happened with FTX, price went down, right? The massive drawdown from where we were sitting for practically the whole entire year. It took roughly 82 days to not only come back, make up that distance, but to actually become higher than we were, have Bitcoin price come higher than that. So I think that was a prime example of resiliency. If you look at last year, everything you could think of and things that we don't even think of, right, were thrown at the market and the market bounced back. If you look at Luna, you look at BlockFi, the list goes on and on. So I think there is this perception right now that this is a space that does have a legitimate reason for some level of exposure. I think right now what you're seeing is something comparable to what we saw during the beginning of COVID, right? Bitcoin price had a swing low down sub 4,000, probably somewhere around 38, shot back up by the end of the year. We were sitting at roughly 27,000. So I think you're seeing money move away from that fiat structure, looking at crypto as a bit of a safe haven, which is ironic to say, right? It is a risk-on asset. So I think this trend will continue this year. I think there's a lot of opportunity in this space, and I think we're just getting started of interesting price action.
Fantastic. Thank you. Max.
Yeah, not a lot to add to that. At the beginning of the year, we were still largely dealing with the aftermath of the FTX, Luno, Celsius, you name it, fallout, essentially. And what my fellow panelists have mentioned is absolutely right. What we've seen is a prime example of market resiliency. A lot of global crucial players have failed, have gone under last year, and we still were only at 17K at the beginning of the year. I mean, that's pretty good from my perspective, right? And now we are almost back at 27K. So it shows that there is more money coming in the market. There is a, yeah, my panelists mentioned, like a safe haven way of thinking about crypto these days, especially about Bitcoin. And we see we are in a global recession. We see countries that are going through some sort of revolutions or turmoil right now. So people desperately looking for safe haven investment instrument. And this is not provided by the banks or by the central banks or the regulatory authorities of these countries that are in turmoil, obviously. They need something that's agnostic, independent from these entities. And that's where crypto and especially Bitcoin play a vital role. And that's why we are back at 27K right now.
Thank you. Tobias.
Yeah, I think it's all pretty interesting points, but I think what I think we should look a bit more in detail is also the recent banking challenges we've seen. For example, Silicon Valley Bank obviously collapsed, and many other related banks as well. And we as a fund, we didn't have exposure, but we were holding USDC at that time. And USDC then pegged down to whatever, 89 cents to $1. And we looked at, and the idea was, okay, now we have a couple of options, right? Now we can either liquidate a USDC, put it back into fiat, or we buy more USDC and hope it goes up 10%. But what we then did is we looked at every single balance sheet of all the stable coins and compared it with the liquidity of banks, right? So if you look at a typical bank, which has for Basel IV roughly 4 to maybe 6-7% liquidity requirements, where Circle, for example, from a USDC perspective, had over 90% liquidity because it was tied up in held to maturity bonds, and obviously as bonds move the opposite direction to interest, they all had to sell at a loss. So it's very interesting to see how the dynamic changes, that not necessarily only the crypto companies are collapsing, but also banks, right? And banks is something where the majority of retail and people, but also institutions, are very afraid of if they are having challenges, because that, as we have seen in 2008 and many other areas, had tremendous effects. And as the Fed moved interest rates, I think the fastest ever since 1980, was a quite predominant factor for these banks being trapped in liquidity and basically had to sell their assets at a loss. And so we were quite confident that USDC can make it, and I think that also brought confidence into the space back, that this is actually a more, probably interesting investment opportunity than many people had thought, that your money in fiat is not necessarily as safe as people thought. And that's why a lot of people moved it back into crypto or bought USDC. We also bought additional USDC because we were so confident in the liquidity situation. And I think that also brought back, and the recent push is basically more or less explained by that, right? And recently when Credit Suisse, had challenges and is now potentially being acquired by UBS for roughly 3 billion. Or even a veto was passed, not a veto, but like a shareholder agreement was passed. So there's a lot of interesting dynamics where we need to look at the crypto space and how that could potentially be one of the opportunities where you can have your idle cash in a potentially more stable situation.
Fantastic, thank you. Now, everyone touched on something there, which is sort of part of my next question, where we're talking about a flight to liquidity. So markets are often driven by sentiment. When traditional markets are heavily sold into, we tend to see a liquidation of all assets in a flight to liquidity. This is usually done into the US dollar. This has been seen with Bitcoin earlier this year. Do we think that pricing is beginning to decouple from traditional markets in terms of where Bitcoin moves? So as a sort of an extra explanation on that, traditional markets down, Bitcoin down. Do we think that's beginning to decouple? And this time I'm going to start with Max, please.
Very good question. My honest answer is I don't think so. As a Bitcoin fan, I would love for that to be the case, but honestly, I do not see it happening right now. Traditional markets and crypto are still positively correlated. Might have been weakened a little bit, but it's still there. But that might not be the case in a year from now, or 2 years, 5, or even 10 years from now, right? So the more we see countries being in unrest, in turmoil, the more we see people losing their trust in centralized institutions and their correlating financial products, the more we will see an influx of people that go the crypto route, whether it's Bitcoin or any other asset, right? So as of today, no. But this is also because most of the traffic right now into crypto still comes from developed countries, where people also have access to traditional financial products. So once that shifts, once more and more people from emerging markets enter the space and use crypto as their primary investment vehicle, then we will most likely see a decoupling, but I don't know when and how it will happen.
Fantastic, thank you. Darius.
Yeah, I think right now I would have to agree. I do not see decoupling actually being something worth noting at this point. It's something interesting to see, but I think it's momentary. I think we would need to see this over an extended time period, a series of a number of years, to actually give a definitive answer. I think that this is a normal sequence of events that happens when there's some level of loss of faith in traditional finance. Let's look at how crypto even came about, right? The collapse of the banking system due to subprime loans, CDOs, mortgage-backed securities, just an utter and complete mess, and a lack of faith in the traditional banking system is where this actual asset class was born out of. I think we're back at the beginning. I think this is a flow of capital from traditional investments into crypto as a safe haven. I think it'll stay here until something bad happens in crypto. It'll move back, right? So I think it's way too soon to say that it's true decoupling. We need to maybe get another 4 or 5 years and then be able to answer that question.
Thank you. Tobias.
No, absolutely not right now. But I think it's also because I think it's predominantly also driven by the regulatory aspect, because I mean, which company is now fully going into crypto if they don't even know if they're going to be I think a lot of the recent banks who were crypto related, they're all shut down by the US. What a coincidence. And I think as long as we don't have a lot more regulatory certainty, I don't think that's going to happen anytime soon, because we don't have that push from institutions, and it's not going to be the retailer who's going to make that volume. That potentially people are going to look at this from a more hedging perspective rather than it is right now, which is very, very correlated to the market, even though we had some up and downs, obviously. But maybe that right now, this whole banking scenario is going to make a difference, but I do think it's still a long way to go.
Thank you. Brenton.
Brilliant. I mean, just to come back to what Darius was saying, it's so funny to see on crypto Twitter when Bitcoin moves up 1% and the S&P moves down 1% in a day, and people are like, the decoupling is happening. I mean, if we were to say that truly, we'd need to see exactly like Darius said, this drop in correlation between traditional risk assets and Bitcoin happening over a sustained, extended period. And I think the reason we haven't seen that, to dig into some of the drivers of that activity, is by and large, the space as a whole is mainly driven by speculative trading activity, which feeds itself into risk on, risk off sentiment. But coming back to what Max said, as soon as the main drivers of that activity is not speculative trading activity, but flights to safety, even from an emerging market perspective, what we've seen is when you see capital flowing into the dollar, one of the effects that we often don't talk about is this mass weakening of emerging market currencies. And this causes a significant devaluation to those populations in Nigeria, etc. And for them, that's a driver for them to look to this technology or this asset as a store of value. And the more that type of activity occurs, and the less activity being driven by crypto being a new asset class, I think the more it'll feed into that decoupling of the assets. But as it stands here today, nowhere near that. I mean, there's still a very tight correlation with US equity indices and Bitcoin, over a sustained period.
Yeah, I think I tend to echo all of your thoughts. I think when we look at the decoupling today, or what people are looking as decoupling, it's event-driven by a particular event. So last weekend, Binance moving from BUSD into Bitcoin and Ethereum, boom, market went up and everyone look, we've decoupled. It was a singular event that did that. And again, you could say this weekend when we saw the run up yesterday to 28,500 from 27, what was that? Was that a relief rally on the back of potentially UBS buying Credit Suisse? Again, event driven. And I think from yesterday, having seen that run up, and we saw the same when equity indices opened this morning, they've all come back down and Bitcoin has come back down to 27,000 again. So yes, thank you. Now, my next question, we often talk or hear about institutional adoption. I would argue that institutions in the space are predominantly crypto native, born from early investment into Bitcoin. I think we're a long way off from seeing banks and pension funds invest directly into Bitcoin, but we're beginning to see banks and custodians build the infrastructure to invest in Bitcoin. For example, Standard Chartered with Zodia. What are your thoughts on this, please? And I'm going to start with Darius this time.
Yeah, I think a prime example is I met with a large-scale institution in Thailand, not a dominant, financial market at all. They didn't even understand what Bitcoin was, right? I mean, they understand in theory, but they don't understand what type of token is it, what is the level of utility of it, what causes the price to go up or down. And I think that there's still a predominant sector within the institutional landscape that still just does not understand this ecosystem. They don't understand the purpose of blockchain. They don't understand the utility of it. Ironically, anyone out there can open their phone and look through your apps, and there's probably 10, 15 apps that are using this technology, right? But we have to separate technology from the actual currency itself. The two are completely different, and many times you can have an absolutely great platform giving an incredible service, customers are happy, and they have a token that is trading, 80% low of their all-time high. So I think right now institutions are looking at crypto more than they ever were before. I think this next bull market that we're all patiently waiting for, right, but we're still a ways away from that actually happening, will be institutional driven. I think right now the ultra conservative endowments, pension funds, especially in the US, they're looking, but they're not interested in really having some massive exposure to it. Typically, you'll see them maybe offering grants, right, to students at their school or their university to further the technology, things like that. But I still think that the actual hurdle of these old school, right, extremely well-funded, sometimes even archaic, right, institutions is just understanding the basic utility. You can't talk to them about ZK, roll-ups and snarks and Shanghai and all this stuff. They have you have to talk to them about what is Ethereum, what does it do, why is it even important, right? So I think many times we have this curse of knowledge. Us here in the space, we know so much about it. We know our fields. We know, the areas that we specialize in, and we almost assume that these other big-brained institutions know what we do, but the vast majority actually don't. So I think we're still, pretty far away from the institutions that all of us want to see come in actually coming in. It was great before FTX happened. You had BlackRock, Nomura, SoftBank. You had a lot of DBS, a lot of big institutions making moves within the space. that got halted a bit, right, from FTX. And I still think that the massive hurdle right now is just basic education about what is even cryptocurrency.
Fantastic. Thank you. Tobias.
Okay, so, I mean, I disagree a little bit that they don't know what's going on. I would say, and we have over 150 LPs, and a lot of them are institutional. A lot of them are, corporations who are interested in exploring that space, but they're not directly investing it, right? They're looking of ways of exploring it, which is either through funds or which is, through participating in other related investment entities who are tackling that space, and then they can take learnings from that. And they are, to a big extent, aware of that has taken on a volume which is undeniable. But, think about it from that perspective. You're a listed company. If you do something and that is not even fully regulated or you don't know how it works, you wouldn't necessarily take on that risk, right? Because that would cost your job, and it would cost the company to substantially lose money if the stock price goes down. And we have seen this on many other companies who tried holding Bitcoin on their balance sheet or engaged in specific things which were related to crypto or NFTs. And for the most part, all the corporations we're dealing with, they're exploring it and they're interested, but they don't have the regulatory framework of exploring it. So although they're very much aware, and even if you look at from some of the corporations who already touched crypto, they're typically only facilitating it. They're not necessarily holding on their own balance sheet. They're just providing ways of, giving people a way of operating it. Same for banks. Some of the big corporations, they bought NFTs and things, but that's not necessarily a conviction, right? It's just trying it out and understanding what's going on. So I would say we are still a long way away from the actual adoption, like the intrinsic adoption. But I do think that we are further ahead of the understanding curve that could be enabled as soon as the regulatory framework is a lot more clear, so that they don't go and take an additional risk, which could be avoided by just investing in T-bills or whatever other things, which is a lot more regulated.
Thank you. Brenton.
Perfect. Look, I think the rest of the panelists, I agree with a lot of the points. I think there's, well, firstly, definitely a lot of the large institutions in the space, the Signums, etc., are all largely crypto native players. I mean, they've done a great job in developing these large institutions, amongst the incumbents. But I really feel there's, and it's already been touched on, three sort of key tenets that stand between us and traditional institutional mass adoption. The one we've touched on is education, right? Again, we sort of have these blinders on as people in the space who think this is all common knowledge. But I've had the privilege of sitting with central banks in Africa who have absolutely no idea how this technology works and what it does. And you would assume central banks around the world would already have expert working groups advising them, and they've openly admitted this to us. So I think education is a big one. The second, I think, is Tobias, or Tobias 1, touched on, is you need a clear regulatory framework. I mean, if you're a listed company with a multi-billion-dollar market capitalization, you've got to be very, very careful about what you do, one. But two, you can only do it within a very clear regulatory framework where there's things to manage things like custodianship, counterparty risk in a much more sort of traditional way than some of the players are handling it today. And I think FTX, etc., just speaks specifically to that, the poor risk management at some of the other firms that have collapsed. And the last one I think is a very interesting one that we haven't touched on is the bigger the organization, generally, the slower they move. And I think one of the things that could potentially propel the move toward traditional industry mass adoption is a significant first mover in the space. And I think one from a large corporate, so them, someone besides Michael Saylor deciding to do a significant balance sheet allocation. But the other, which is probably a little bit more interesting and lower probability at the moment, is the current geopolitical situation. So, it's not, completely unheard of that we might see a nation state take a strategic position in the technology or the asset class, obviously sometime in the future, and this could be a very big step towards legitimizing it as an asset allocation. particularly given, we're having an absolutely archaic geopolitical situation at the moment. Everybody is fighting with everybody and looking for a strategic way to benefit and sort of reduce their risk in terms of exposure or risk to these other nations, be it from supply chain, et cetera, and I think that is potentially a catalyst that could move us faster towards a space of mass adoption from institutions.
Thank you. Finally, Max.
I don't have a lot to add after my dear panelists have basically explained everything. So there are more and more corporations that are tipping their toe into, let's call it crypto waters right now. And there are different stages in exploring the ecosystem. You mentioned Standard Chartered, so there are, of course, Societe Generale with their Forge platform is another very prominent player in the space. We now Citi signed up with MetaCode to explore the space, et cetera, et cetera. And these are just a few ones that come to my mind right now, right? There's a lot of things happening. But if one thing, what is the overarching theme, or what has been the overarching theme over the last, let's say, 12 months in the crypto space? Poor risk management in one shape or the other, right? Across everything that happens, you can always boil it down to some form of poor risk management. And that, of course, didn't help. It didn't help that the regulators in the US are cracking down on the banks now in the United States. But that's what big institutional companies are monitoring and are aware of, essentially, right? So these factors will just make the process a little bit longer than it might have been without an FTX fallout, without a shutdown of signatures, Silvergate and SVB maybe. But that doesn't stop them. Institutions have to innovate. They are under a lot of pressure. They know there are only so many traditional financial products out there and creatable, essentially, so they need to innovate. They're under a lot of pressure, both from their shareholder, but also from their customer perspective. And they will come more and more in the space, but at their own pace, at their own time now, especially with the fallouts of the last 12 months.
Fantastic, thank you. Well, I'm afraid I've got some good news and I've got some bad news. I had one more question to ask, which was the bad news, but we appear to have run out of time. The good news is the question was about the digital asset markets being retail driven and what needs to happen for wider adoption. And I think in that last question, we actually managed to answer that. So thank you very much. Before I wrap up, I want to apologize to Tobias, not for having a fantastic name, because you didn't get a chance to go first. So apologies there. Thank you very much for listening. I'd like to thank all of my fellow panelists for being part of a very interesting discussion, and look forward to talking and meeting with people as the conference goes on. So, can I have a big round of applause for my guests, please?